Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors, and welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan, and I am so delighted that you are with us once again today. It is always a pleasure being with you. Today, we're going to divert a little bit from our typical real estate focus, and we're going to look at an alternative investment. We're going to look at an aspect of Circuit City and how they are disrupting the consumer electronic industry. With us today is Josh Ziegelbaum, and he is the head of investor relations at Circuit City. In his role as investor relations, Josh is responsible for managing investor communications, capital commitments, individual and commercial relationships, as well as overall support of the company's growth initiatives. And so we're glad to have you with us, Josh, today. And so if you would, take us into the show and share a memorable experience from your formative years that may have been key to who you are today.
Dr. Allen, thanks again for having me back on the show. Very excited to be here with you and to discuss this unique opportunity with your audience. So unique experience for me that shaped where I am today. I would have to point back to one of my earlier professional careers. It was as a private banker with a big box bank. Many of you probably know it, Wells Fargo and Wells Fargo Advisors. I got this role as a junior banker first, shortly out of college, climbed my way up the ranks. And in that position as a private banker, I really got a sense of the thought process of high net worth individuals. My task as a banker was to work with these individuals, provide them banking solutions, whether that's depository, credit, or investments. But I had really strong relationships with a book of business, and I got to know these people really well and see what they're doing. Overwhelmingly real estate, and to no surprise to you, and leveraging the bank services in order to acquire and dispose of both residential and commercial assets. Really, the power of that I was witnessing as I saw the flow of funds in my clients' bank accounts, and it just got me really interested in. And I guess you could argue real estate is an alternative investment outside of what's in the stock market. Got me really interested in alternatives, and also, if they weren't in real estate, I noticed all my clients had something else in common. They were doing operating businesses. So I found like spaces that were intriguing to me that kind of drove my future decisions professionally, personally. Got involved in real estate investing from my mid-20s. Started working in private equity after I departed from the bank. Working with issuers, private companies to raise and manage capital, drive forward their businesses, really almost, and when I take my step back and look at it from the outside looking in, a lot of it is like the activities and behaviors that I witnessed my clients from an early start in my career. So that definitely shaped where I am today and kind of drove the direction of my career, kind of very far from the world of traditional banking to where we are today.
Well, interesting background and a very useful and beneficial background for investing in real estate and also other alternative investments. I'm going to segue from that into what we're going to be talking about today, but I'm curious as to what took you from actually the banking environment into the capital raising environment, because even before Circuit City, that was really primarily what you were doing with, I forget the name of the company, but the company in South America that you were working with, you were doing capital raising for them as well. So how did you transition from a banker to a capital raiser?
Yeah, great question, Alan. Let me take you back a little closer to the beginning. So I was born and raised in central New Jersey, not far from New York, about 45 minutes outside of Manhattan. And from a younger age, I was interested in Wall Street, as many people are from New Jersey and the New York area, particularly those that are studying finance and economics. So when I got out of school and realized, I wasn't as connected enough to get onto Wall Street and didn't do the things that I needed to in college to bring that to fruition, started cutting my teeth in at Wells Fargo in New Jersey. And like I said, climbed my way up over 6 years, ended up as a private banker. But interestingly, back in 2018, when I had that role, I got an opportunity to do a transfer to South Florida. So a position opened up. A friend of mine, counterpart, had the same role as me. He got me lined up for a lateral to Miami Beach from the suburbs of New Jersey to Miami Beach, which is a very happy thing to do, and made a lot of sense for me and my family at the time. But I didn't know what kind of opportunity that would lead to. And luckily, it got me to where I am today. So how did that happen? About a year after coming down here, I saw the same themes, only at a higher scale. So my high net worth clients were even more involved in real estate, more involved in private operating businesses in Miami Beach than I saw in Central Jersey. And I got more, I guess you could say, tired of the corporate grind and wearing a suit every day, having to report to my clients, and really having nothing to say for it except my salary and whatever stocks I was awarded each year from Wells Fargo. And I started getting interested in private markets just from the workings of my clients. And then during a vacation, I was down in Mexico at my wife's home outside of Mexico City, and I started thinking, I'm like, you know what? I don't feel as fulfilled in this role anymore, and I haven't looked at all outside of the bank the whole time I've been here. So what's out there? So I started poking around on LinkedIn, and based on my experience, high net worth individuals, finance, investments, I started to run different keywords and see what came up. So I saw a role for vice president of business development. It was for a private equity firm. They were looking for someone remote out of Miami, the Miami area, that was bilingual in English and Spanish. So I checked those boxes. I had a background working with high net worth individuals in a different capacity, but they absolutely needed that. So this firm, they were looking to raise capital for real estate developments and operating companies in Latin America. So we were doing projects in Puerto Rico and Colombia. I was like I said, a VP of business development. This is my first foray into private markets. So I shifted at that point into that career. I want to say 4 years ago now, right? And then at a point, after about a year and a half as VP of Business Development, two of the principals at that firm, they decided to step down and focus on another venture that they have and another separate private equity firm, right? So they poached me to come in as Director of Investor Relations. The firm was called Legacy Group, and they're still based out of Medellin, Colombia, and they invest in bespoke assets, namely Green Coffee Company. It's Colombia's largest coffee producer. And we brought in over $60 million of capital from high net worth individuals for that opportunity over a span of about 2.5 years. And I learned a lot about the business at that time, a lot about capital raising, investor relations, business development, of course. And we successfully completed their Series B round. We completed the Series C funding round earlier this year. And then on my end, personally, I was given an opportunity to move to Medellin, Colombia, take my career up to the next level. At the same time, I was having a baby on the way. So I just had a son, August 2023, and I knew he was on the way. And Fort Lauderdale, Florida is home to my wife and I. It has been for several years since we moved down here. And we thought it was best for us with the conclusion of that funding round and the new addition to our family that it was time for me to find another opportunity. So I was stepping down, planning to take some personal time. During that period, I met the CEO of Circuit City. He acquired the brand and all of its assets, relaunched online in 2018, and has done over $100 million of revenue to date. He was looking to raise Series A capital from VC firms, from venture capitalists. And when we got to talking about my experience working with high net worth individuals, hundreds of investors, and raising out rounds in smaller checks, but in an efficient manner, of course, very different approach than going after one check from a VC. The current CEO, he loved the concepts and the ideas of doing a funding round, Reg D, 506C, accredited investors only, high net worth individuals. And we opened that up tail end of 2023. And I'm taking the abilities and the skills that I've learned over the years, applying that to this investment opportunity, and our goal is to disrupt the consumer electronics industry. We're bringing in 25 million of Series A funding, and as I mentioned, I work as head of investor relations for the company.
Well, most of us have heard of Circuit City. It's certainly a well-known brand name and somewhat a tarnished reputation. So, how have you gone about relaunching that brand, and with the intention of disrupting the consumer electronic industry as we have known it prior to now.
Yes, that's a great point, Alan. And this is a brand, like you said, that many of us know. There's a lot of nostalgia behind the Circuit City brand. It has an iconic history dating back 75 years, essentially, since its founding. And it was known primarily as a large brick and mortar retailer, of course. In 2009, during the financial crisis, they had to shut their doors. It was a combination of issues. Companies and consumer preferences were shifting online. The company had substantial long-term leases, high amounts of debt, and mismanagement, which led to its demise. So they shut their doors in 2009, along with many other companies. And the IP and its assets, they were sold at bankruptcy auction to a company called Systemax. Systemax then sold us, the brand, in 2016. Ronnie Shmuel, the current CEO, and his family office. They have over 20 years of experience as a family office, acquiring brands, relaunching them online, working in the consumer electronics and e-commerce industries, really an expert team in the space. And when they got the opportunity to acquire this, it was an opportunity we couldn't pass up. So it was relaunched 2 years later in 2018 with a focus on becoming the premier online destination in the consumer electronics category. The keyword there is online, connecting consumers, businesses, and third-party sellers in one ecosystem while leveraging the Circuit City brand. So the company as we knew it with the large stores and that brick and mortar experience is no longer, but we're taking the perception of the brand and its perception as a category leader and leveraging that to build a technology platform. You could almost argue it's like an alternative to other shopping experiences, but we're really trying to create a more curated shopping experience where customers are given what's relevant to them, both businesses and consumers, and then some really exciting things that make it different from what else is in the market are a couple of our other verticals outside of the two core, which are direct-to-consumer sales and B sales. We launched an initiative called Powered by Circuit City here in Q4 2023, for which we're leveraging the brand once again, but we're partnering with national retailers, empowering their online sales, and in certain cases have an in-store presence in our consumer electronics category. So the first partnership that we launched was at JCPenney, went live about a month ago as of the time of this recording. And we have a small in-store placement in 288 stores. But what's really the most exciting about it is that we're powering their online sales. So if a consumer is going to the JCPenney website and they find their way on the electronics page, they'll see the Circuit City brand. All the orders get routed and fulfilled through us and connected into our ecosystem. So we're leveraging the 35 million monthly visits to JCPenney to drive incremental revenue for us and also increase revenue for them as a retail partner and really give them a white glove experience. So this is just one partnership, and we intend on rolling out future ones with other large national companies. Think of like a Lowe's or an AutoZone or some like large player that doesn't really control this category, but they know that their customers in this category. So where we come in. I mean, you're seeing this a lot in the market in other segments, Toys R Us and Macy's, so Target, PetSmart's actually coming into Lowe's pretty soon. So this store-in-store concept where companies are leveraging brands that have identity is something that's very much in the market. We're just doing it at scale in the consumer electronics category, and we don't really see any other brand that's capable of doing that with that same recognition. Because I mean, the ones that come to mind are Best Buy, Amazon, Circuit City, and I mean, you might buy from Walmart or Target, but there's really no brand that could be acquired for what we acquired it for that could hit that global awareness. So Powered by Circuit City is our newest pillar that we're really excited about. The fourth would be marketplace. So we intend to launch the only third-party marketplace specifically for consumer electronics. And what do I mean by that? I mean third-party sellers, such as sellers who sell on Amazon, having an alternative to that, where they can list product on our platform, capture more of their margins, and of course sell under the Circuit City brand. And then that connects with the other existing infrastructure. So think about this Powered by relationship and the websites that we're on and the stores that we're in. That can connect back to the third-party seller platform. And so there's a lot of legs to this, multiple revenue streams, direct to consumer, business to business, powered by, and marketplace. We see a path to continuous profitability. I didn't mention that, Alan, but we've been profitable since relaunch, year over year. And the focus now is on growth. So with the initiation of this Series A funding round that we've opened to accredited investors, we are going to be building out these pillars, and we expect to grow revenue from $20 million this year in 2023 up to $264 million by 2028. And it's a private company, so this is common stock in a private company. Of course, an alternative investment because it's illiquid, it's not publicly traded, but we see a path to that revenue figure. The goal being at that point or along the way, conducting an IPO in U.S. markets, bringing back the brand in that manner. But realistically, this is a great M&A target. Walmart's been buying up large brands, really trying to just catch up with Amazon in a lot of different facets. And then there's just one company that comes to mind for me, but we're dual tracking for a sale, for an IPO, and there could be liquidity events along the way potentially. But we're doing a lot of things special in the market, and the wind is behind us really with respect to trends. Consumer preferences are shifting online, specifically electronic sales are heavily shifting online. And we want to be at the front of that.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Well, you had mentioned Amazon, and it is a behemoth in online sales. How were you able, really, from the get-go? You said you were profitable from the very beginning of this. I think you brought in $120 million in revenue, and you are directly competing with Amazon. How have you been able to do that?
Sure. So I'll start at the total addressable market in the US for consumer electronics. This is a $500 billion a year industry. So even looking forward, not at our current numbers, but looking forward to our 2028 figure of 264 million, I mean, we're essentially saying that for us to hit those numbers, we need to achieve market share of 0.05% of the total addressable market. So 0.5% of the US addressable market to hit our figures. So are we competing with them? Yes, but do we need to take market share from them? Not really. So Amazon controls somewhere around 10 to 20% of the US market. Best Buy, similar. And then the balance is a plethora of other companies. So for us to hit these figures, yes, shoppers might be accustomed to buying everything on Amazon, but what we want to do is be the destination that they come to specific for this category, and they get a better, cleaner experience. When you go to Amazon, it's a flood of, I buy from Amazon, as do most of us, it's a flood of products on the page, and you don't necessarily know what to buy in certain cases. This might be fine when it's like a toaster oven or some sort of appliance for the house or something it isn't as complex of a purchase. But for larger ticket electronics where the needs could be, I have something in school, how do I know how much power something has to support what I need? Maybe I'm a programmer, maybe I need a TV, but how do I, when you go into a store, you can get these guided shopping experience. Online, it's very self-service. So we're trying to close the gap there and provide a better customer experience, just like the old Circuit City did in store, but apply that online, on-call experts, whether that's chat, live chat support, phone support, to really help guide this process for our customers. And then something like Powered by Circuit City, that's proprietary to us. Amazon doesn't have that vertical where they're leveraging the Amazon brand and just powering categories for other companies. So that's proprietary to us. And then the marketplace, their fees are, not to make this podcast like me talking bad about Amazon, but the fees that they're taking from the sellers, a lot of products aren't able to even be sold with a profit. Like there's such high fulfilled by Amazon fees and ancillary fees. People can't understand their their bill in many cases, and those sellers will continue to sell on Amazon. So what we would like to offer them, or at least a select group of them, is another channel where they could sell product and reach more clients, right? So third-party sellers are always looking for other avenues that they can sell product, and then we intend on giving them their margins back. And like I said, capturing a very small percentage of the overall market share under our assumptions.
Well, that is interesting, in a lot of ways. At how you've been able to go in there and be profitable, even with Amazon being the behemoth that it is. Of course, Amazon. The reason people go to Amazon, it's just out there in everybody's face, and you don't have to think. You don't have to really do anything but push the button, and everything's right there for you. They did a remarkable job of pulling all of that together. And of course, there have been a lot of things that have been advantageous. The pandemic was a wonderful godsend for Amazon. And even before that, there were things that were certainly going in the favor of Amazon. And they developed a good platform. But like you say, the sellers are not getting a particularly good deal on there. And you have an opportunity to provide a product that can be more profitable for other sellers. So I'm thinking that other sellers are going to start finding their ways and means away from Amazon to finding alternatives to that. It's very difficult for small retailers to do that, but if there are alternatives out there which you're starting to provide, I think people are going to start going to those. Well, talking about the seamlessness of Amazon, which it certainly is, you're going to an AI platform, but you also mentioned that you could have live technicians to go to. So talk to us about the platform that you're going to provide, the AI, and how that is going to work with actual being able to talk to a person, which Amazon does not offer unless you just really, really, really look really, really diligent. In fact, I've never had a conversation with anyone at Amazon, but you're going to provide that, which I think would be a wonderful, wonderful alternative. So talk to us about this next.
Yeah, so the live chat feature, whether it's on the phone, that would be a live individual. So that particular facet wouldn't be AI driven, right? And then we strive to do the same in like a text support and an email support. You could leverage some AI for certain more simplistic responses before connecting to a live person, even if you're just texting within the platform. But the AI component that we speak of is really more to the curation of products for the specific customer, right? So if someone comes to our page and we have identified them as an individual in a certain demographic or in a certain industry or in a certain part of the country, we can use data in order to display products that would be relevant to them, right? Without flooding the page in certain cases. So tracking customer activity and data will allow us to present more appropriate offerings for them, right? When it comes to the powered by component, a lot goes in on the AI component of like determining like what types of products are purchased by JCPenney people, right? So we're going to be putting products on the page that wouldn't be relevant to those demographics of purchasers. And that'll carry across different powered by Circuit City customers. So let's say we partnered, use this as an example, with a Walgreens. A Walgreens would have like the products that would be linked through the APIs, through the websites. It would be things that are purchased in Walgreens. So think like car chargers, lightning cables, headphones, things of that nature. And then we can tailor it even more to the demographic. So it all kind of comes together in one platform, but there are certain components like that on like the product curation side that will be leveraging AI to make a better shopping experience for our customers, in addition to other, of course, parts of the business that are more on the back end.
Well, it looks like a really interesting project and a good investment for people who are looking for alternative kinds of investments. So tell us, Josh, about the offerings that you are providing to investors. What are they? How do we get in touch with you to get involved in investing with Circuit City?
Yes, of course. So This is offering that we just opened here in Q4 2023 is a Series A funding round. It's the first outside capital raise since the family office of Ronnie Shmuel acquired the brand and relaunched it in 2018. So it's a $25 million raise. We set a pre-money valuation of $187.5 million. We're issuing common equity in Circuit City Holdings. The company owns all the intellectual property, all the global IP, all the company's assets and rights to its cash flows. Something interesting here, it's not, there's no asset manager. So this is not, there's no asset management fees, no carried interest, things that you would see in like a typical real estate syndication or in a venture fund. This is a direct placement from the issuer, Circuit City. And the reason that is because I identified the need here of the company for capital. They were not in the business of being an asset manager and looking to oversee that. They were looking for growth capital from a VC. So what we did is we structured a Reg D 506C offering open to accredited investors only. We set a 100,000 minimum investment. That's USD, of course. And we expect to have the round open through part of 2024. We welcome high net worth individuals, ultra high net worth, and select institutional investors to participate. It's growth capital into the business to build out the verticals I mentioned, e-commerce, B2B, powered by and marketplace. Money's going to be spent in marketing, operations, team building, technology development. We have a full investor presentation I'd be happy to share with anyone that reaches out to us. You could find us online on our website at invest.circuitcity.com. And we could also be reached by email, investor.relations@circuitcity.com, and be happy to connect with any of you and give you more details about it.
And all of that information will be in our show notes. So, Josh, any closing comments, last things you'd like to say to our audience?
Yeah, I would say it seems like, of course, the theme of this podcast is real estate. I will say many of our investors, both in this opportunity and in the past private company opportunities I've worked on, a lot of our investors are real estate focused. And what they like about these businesses is the lack of correlation to the rest of their portfolio. When times are good, you feel great being being where you're at, but sometimes we see a lot of the public asset classes and real estate move in tandem with one another, whether that's, and it's not really supposed to work that way historically, but we're seeing like a very high correlation between all asset classes recently, right? So private equity being illiquid and early stage with multiple paths to liquidity, you really have the chance to diligence the businesses on a more intricate level and kind of see what's sound that could fit in your portfolio. So even if this is something that's typically outside of what you might look at as an investor, whether maybe it's not Circuit City, maybe it's something else, but I would encourage investors to look at early stage venture type opportunities, Series A, Series B. You can really build out an asymmetric return profile that is not correlated with the rest of your holdings, whether that's real estate, public equities, bonds, cash, things of that nature. So if this is an asset class this is newer to you, I'd encourage you to look into it and carve out a small portion of your overall net worth for things that have higher potential return profiles that don't move with the rest of your holdings.
Well, Josh, it has been a pleasure having you. Thank you for sharing the opportunity with Circuit City. It's been very informative and very enlightening. Thank you so much for being with us. Enlightened investors, thank you for being with us again today. We treasure your presence with us and really appreciate you being with us. Please take a moment to like, share, and subscribe. And I'd be very, very appreciative if you could go over to Apple Podcast and leave us a rating and a review. Until next time, live abundantly, and we'll see you in the next episode.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar, that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to steedtalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to steedtalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steed Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steed Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at steedtalker.com.